Bueno, volvemos a tener una junta general, ha pasado un año y como saben ustedes prácticamente no ha pasado nada. Ha habido de todo, hemos tenido un año espectacular.
Things happening. It's been a spectacular year. And I must say that the situation of the world is pretty surprising. What isn't surprising is the situation of Dominion. Dominion had a work plan for this year, and as you can see, we are covering everything at the plan. The only problem or the only difficulty that we are having in relation to this field is that the financial world is somewhat stagnant because of this issue that has to do with the tariffs and so on and so forth, because there's lots of uncertainty in terms of reality. So that means that the financial world, especially the M&A operations, are somewhat stagnant. And this is what we are suffering in the real world. And what we can say that apart from the financial world, we can say that the economic inertia is enormous. And this economic inertia means that things flow and run smoothly. So what I would say is that although you in the press read about so many black swans and many bad things, the world of economy or the economic world continues. And let's say that all of those companies that in this world were working with a solid base are continuing to operate with a solid base. But in the case of Dominion, we have gone through a transitional year because, as you possibly know, we wanted to make use of the company's efforts so that they could be focused on the environment. And then we also wanted to go back to our roots as regards the basic activities of Dominion and things that we've been doing for many years. Well, this is the process that we've been carrying out, and we've had some divestments and some significant divestments with other things that are currently in progress, and which we hope that in the year 2025 we will be able to end this process and have a company that, let's say, is much more straightforward as regards how it can be explained, although always with the same spirit and with the same way of working as we began quite a few years ago. And this is what we do not want to lose from sight. So we're talking about simplifying things, and we're also talking about working in some specific field in our historic fields, plus the environment, where we believe that we can do some great work. Great work that is very important from the economic perspective, and especially so from the social perspective, because this is going to mean that we are going to be able to assist society in this movement so that our grandchildren can have a much better future ahead of them. And this is the world in which we stand. And let's say that this is what Dominion is also developing right now, because what we think is that the strategic guidelines have been accepted, and we believe that this simplification process is going to make it possible for us to make our investors and the financial world to see the hidden value behind this company. And with that, we also believe that we will be able to achieve a much higher level of remuneration for our shares, both in terms of dividends and their value or their worth. And this is one of the things that, although we are very happy about how we are working and what we are working with, and although we know that we have some very good strategic development ideas, we are somewhat unhappy because this has still not become bigger value for our shares or for our stocks. And we believe that the company really deserves this. So, okay, so this is what I wanted to kick off with at this AGM. And now I'm going to give the floor to the secretary so that he can talk about how this meeting is being called. Well, let's move on to the formal elements that are going to allow us to open this AGM so that we can discuss points and perhaps also reach resolutions according to the items that appear on the program. And in the meeting held by the board on February the 25th of 2025, the board decided to call an ordinary meeting for the AGM of this company to be held on 12 o'clock on May the 5th, in the first call, and if not, in a second call in Bilbao, here at its registered office. And the advertisement of this AGM was published on April the 1st in 2025 in El Mundo, a newspaper, and also on our website and on the website of the Stock Exchange Commission. And it was pointed out that this AGM would possibly be held according to the second call. And according to what is established in the bylaws, we have as the chairman and secretary of this AGM those that form part of the board, and also we have the rest of the members of the board who are here at this AGM to attend the session. And this is the second fall for the AGM, and this is something that I was pointing out in the announcement that was made. And at 12 o'clock yesterday, we didn't have the minimum quorum to hold it under the first call. So as regards seeing whether we have a minimum quorum for holding this AGM in the second call, I can give you the next provisional data, the following provisional data regarding quorum. We say that the share capital is 18,892,502.60 euros, divided into 151,140,021 shares of 100.025 euros in nominal value each. And until now, it so happens that we have at this AGM, we have 24 shareholders that are physically present here, representing 54,385,000 shares, which is 35.98% of the share capital. And those that are represented at the meeting are 49 shareholders that represent over 19 million shares. And this means that it's 12.83% of the share capital. So the shareholders that are either present or represented, we have 73, and they represent more than 76 million shares, or more than 73 million shares, when that means it's 48.8% of the share capital. And I will give you the final figures before we move on to the votes, the voting process for the different items. But with this provisional quorum, I can say that we have here more than 25% of the share capital present, which is the minimum quorum that is demanded by Articles 184, 194, 201 of the Corporations Law to validly constitute this meeting in its second call. So therefore, and with this information in mind, I'd like to suggest that the chairman declared that this is validly constituted so that we can move on to the points on the agenda. Or having met the requirements demanded by law and by the social bylaws, I declare that this AGM of Global Dominion Access Sociedad Anónima is validly constituted. And I would now like to ask the secretary to now describe the agenda. Well, in the announcements that I mentioned before, we also included this agenda, which is as follows. Point number 1, examination and approval, if pertinent, of the annual accounts and the management report of Global Dominion Access, as well as of the annual accounts and the management report of its consolidated group of companies corresponding to the fiscal year closing in 2024, and then the approval of board management actions related to the 2024 fiscal year. Point number 3, approval of the proposal to apply the results corresponding to the fiscal year that ended in December 2024. And point number 4, examination and approval of the non-financial statement and also sustainability information of Global Dominion Access and its consolidated group covering the fiscal year 2024. And point number 5, revoking the resolution passed by the AGM on April the 23rd of 2024, authorizing the board to acquire for the derivative acquisition of its own treasury shares as per Articles 149 and 509 of the Corporations Law, and authorize the board to adopt reduction of capital based on the shares acquired. And point number 6, extension or appointment of the auditors of this company. Point number 7, setting the maximum amount of the remuneration of the members of the board for the current fiscal year. And point number 8, approval of a new remuneration policy for the directors for the fiscal years 2026, 27 and 28. Point number 9, we will also take a vote on the annual remuneration report for the members of the board for the year 2024, and then we have the delegation of powers for the implementation of these agreements. And point number 11, we will have to approve the minutes of the meeting. And now the Secretary will now detail or describe the agreements that are proposed for their approval in relation to the points raised in the agenda of this AGM. Well, as stipulated by the corporations law, we have published when we announced this AGM the complete contents of the agreements that are to be voted upon here by this AGM. And this was published on the website, on the corporate website, and also it was published by the Stock Exchange Commission. And as this information is public, and if you think that this is pertinent, I'd just like to deliver a very quick summary. It's a very quick reference to the contents of each of the agreements, of course. And of course, during the Q&A session, if any of you wants me to read all or part of these agreements, we will do so according to your request. Okay, so in summary, the different items on the agenda include the following. The first point refers to the examination of the annual accounts and the balance sheet and the changes in our equity, and also the management report of the company, the individual company, in the period that finished on December the 31st in 2024, and also the approval of these annual accounts that have to do with the consolidated group of companies. And point number 2 refers to the approval of the management actions of the Board of Directors in 2024. And point number 3, which is important because here we have some figures, some economic figures. This refers to the proposal to apply the results of the fiscal year 2024. So we have a total amount of profits. I'm going to give you the figures in thousands of euros. So we're talking about over 27 million, and we say that this be allocated to voluntary reserves, and for a total amount of 12,869, and the allocation for dividends would be a figure of 14,998,000 euros. So as per this proposal, we suggest the approval of a dividend that each one of the shares would receive, which would reach 0.10 euros gross per share to be paid on July the 9th, 2025. Point number 4 refers to the examination approval of the non-financial statement and also sustainability information that has to do with the fiscal year that closed in December 2024 and that forms part of the management report that I referred to under heading item number 9. Point number 5, and being brief about this, and we revoke the resolution reached by the board on April the 23rd, 2024, so that we can authorize the board for the derivative acquisition of treasury shares as laid down in Articles 146 and 509 of the corporate law. And we also suggest that we authorize the board of directors to reduce share capital by amortizing its treasury shares. Point number 6 refers to the extension or to the appointment. Well, in this case, it would be the extension of PricewaterhouseCoopers auditors as auditors of the company and its consolidated firms for the fiscal year that will close on December the 31st, 2025. Point number 7 establishes the maximum remuneration of members of the board for the current fiscal year, and according to what is established in the remuneration policy that is currently in force, and it's suggested that this be established at 1.3 million euros. And point number 8 says that we need the approval of the new remunerations policy for the board that be applied to the fiscal years 2026, 27 and 2028. And it has to be pointed out too that item number 5 has received a favorable support from the board, and point number 6 that has to do with the Audit and Compliance Committee, and this is point number 7 and 8 of the Remunerations and Appointments Committee. Point number 9 refers to as established in Article 541 of the corporate law. It refers to the remuneration report for the members of the board that was approved by the board on February the 25th. And point number 10 refers to the framework agreement to delegate powers to the board and to the secretary to for the public deeds or for the execution agreements that are required, so that all of the agreements that are passed here in this AGM can be formalized. And point number 11 has to do with what we do at the end of this AGM, that is the approval of the minutes of the meeting. Well, as usual, I'm now going to give the floor to the CEO, Mr. Mikel Barandiaran Landin, so that he can now provide us with information on the individual and consolidated financial statements pertaining to the fiscal year that ended on December the 31st in 2024, and so that he can also speak about how the business has evolved in this period. Good morning. I'm here to talk about the figures, and I will try to make this as amusing as possible. And well, I'm going to try to present everything in a straightforward manner. But if you need any clarification later on, well, during the Q&A, I will be at your disposal for whatever you know that 2024 has not been an easy year. It was a complex year due to many reasons, because of the geostrategic environment. The war in Ukraine affected our activities in Germany, and whatever had to do with industrial connections with Russia and Ukraine too. We had complexities in Israel with the war in Gaza. We've had our activities at a standstill until this year, and a number of other events in Latin America, elections in Mexico, elections in the Dominican Republic too, and all of this put together, all of this has had its impact on our accounts. But in any case, I have to say that, as you know perfectly well, we have met the targets that had been defined by the board of directors of this company, and let's say that the process has been very suitable. We are now halfway through our plan. Our plan covered three fundamental vectors. Vector number one was having a much more recurrent company to deal with these events. And well, we knew that there was going to be much more uncertainty in the world, and that we had to prepare the company to deal with the situation. So we needed to have a company that should at least reach 60% of recurrent activities. And I can say that the recurrent activities accounted for 64% of the company's activities on the closing date of 2024. So this shows, or this proves, that in the face of practically any kind of event, the company is very solid and very solvent and knows what to do. And the second major vector, which has to do with simplifying the company, making it much more straightforward. And for that, we're going to carry out a number of divestments, and we're going to invest in specific areas of the company, and that are things that are fully in line with the company's plan. In other words, focused on environmental services. So in other words, we have to become a much more taxonomic company. And I think that we've worked very hard in all three areas, in all three vectors, with major progress. And we finished our strategic plan. We've completed it. And I would like to talk about recurrences now, so that I can describe how our accounts have evolved. We kicked off with a plan with 50% of recurrent activities, in other words, recurrent services. And as I said before, we've closed in an environment of about 65%. Let's say that point number one is based on seeing how our business figures have evolved. We've grown to 2% organically, and organic growth has been affected by divestments, and we will see these operations later on. We've closed at 1.53 million euros, and we've had a forex impact of 2%, where perhaps the biggest impacts in terms of exchange rates are focused on Mexico and Argentina fundamentally. And then the business divided by geographies. Well, we have 59% in Europe and 8% in Asia and Oceania, and the other percentage in America. If we compare ourselves with the year 2023, we've had some significant growth in Europe, fundamentally because of the growth in networks and because of the construction of new telecommunications networks in Germany, and because there's been a slight decrease in America because of the finalization of our activities in the Dominican Republic. And Asia and Oceania have behaved in a more or less flat manner. But let's say that the biggest effect in terms of the exchange rates have to do with projects. You know that projects are much more associated with cyclical changes. And let's say that when there are geostrategically good situations, investment levels go up, but when there's instability, these levels go down again. And the service areas are maintained in a constant manner. So this has been conducive to a generation of a contribution margin of 177 million. And if you were to calculate, well, 65% of this contribution margin, you can see that we now stand at recurrent levels that are far above 100 million. It's nearly 120 million euros. And if we were to limit the structure of the company, it would be about 25 million, and that would be 90 or 95 million of EBITDA in the company that can be guaranteed, regardless of how the project or solutions are developed. And the contribution margin has grown by 3.5%, and we've managed to maintain in this period a sales structure, and we think that it's very low. It's 2.3% of the company's sales, far below our competition. They are above 5 and below our target, which was 2.5. And this has been conducive to an EBITDA growth of 4%, and it's now 151 million euros. Comparable profits, well, this has also been affected too by growth in financial expenses, and also because there's been more taxes paid compared to 2023. We've paid 7 million more in taxes. And if we were to take a look at the divisions of the company, let's start off with the Sustainable Services division. Also have a bridge here so you can see what the evolution of this area is like. We can see that under services, we've had some significant growth, although the growth of the company was 2%, growth in services was 7% in organic. And as I said at the beginning, it's increased the recurrence of the company. We've had a decrease, inorganic decrease 4% because of the impact of the sale of our multi-technical services to Serveo, which we announced at the end of the year, and also because there's been a forex effect of 2%. And this has situated us at 831 million in services, in turnover for services. Now, if we now move on to another area that has to do with projects, which has been the most penalized area because of this situation of uncertainty, because of this geostrategic problem, because although we have a very significant portfolio with more than 3 years of contract resolution, we're talking about something like 600 million euros. And you have a bridge here because there's been an inorganic decrease in the development projects of 9%, and there hasn't been any divestment of activities, and this had a forex impact of 3%. So we have a turnover of 307 million with nearly 60 million of contribution margin over sales. And here, what has to be underscored is that we also have included more than 60 million in the portfolio in things that had to do with industrial projects. But if we were now to move on to the balance sheet of the company, we've closed the year with 183 million euros in debt, and practically all of them can be allocated to our area of renewables, either through 100% stake in renewables, including Incus here, and also because we've invested in equity in the different projects we have in the Dominican Republic. And even in spite of these levels of investment, we've maintained RONA in terms of net assets that is very close to our target of 20%. So we have net assets totaling 19%, and we are continuing with our plan so that we can reduce our debt and go down to levels below 100 million with a number of divestments in our investments in renewable assets. And as regards to cash flow, we've had a cash flow generation that I'd say is very healthy, with a growth of 7.5% compared to the previous year in the generation of free cash flow. And as you can see, we've invested on the right-hand side of the screen, and we've acquired 100% of stakes in our renewables firm. We have the payout of dividends, and here you can see the different items. Regarding non-financial information, well, there are three major chapters. One of them that has to do with the governance and social aspects, and well, as regards the environmental issues, our company has a very low level of investments. Low level of emissions. We have emissions below 100 tons of CO2, far below our competitors. They have 5 times more than we have, and well, compared to the industrial firms, they have 50 times more than what we report. But even so, we are continuing with our climate transition plans. We have objectives fully defined, and we are now continuing with our compliance and with permanent evaluations of climate risks. And even though we are talking about non-financial information, we have the first report, CRSD, because of the sale of our multi-technical services, we have diminished the number of employees. We had 13,000 at the end of 2023, and now we have 11,000 employees this year. And we are continuing with our commitment towards people, and it couldn't be otherwise because our company is based on services, and it's also highly based on its own culture. And we are furthering diversity and inclusion. You know that we have more than 70 nationalities in over 30 countries, and 4 generations too. And we are increasing our levels of training. We've implemented this. We've increased this by more than 50%, especially as regards safety. We have our own zero accident program, and we are investing constantly to achieve these levels of zero occupational accidents. We are boosting talent. We have internal as well as external activities that are associated with talent. Externally, we have a program that is called Biquo. We attract external talent and we bring them to Bilbao. We have them here for 6 months with us. We train them and we integrate them in our culture. And later, at a later stage, we then extract innovative development projects for our area of R&D or innovation, and sometimes we give them projects so that they can develop them. And also in-house, we have projects for the people that work here that have to do with intra-entrepreneurship or the development and promotion of innovation. Regarding governance, we have renovated our ISO standard, the anti-corruption standard, and we've also improved our levels of safety, occupational safety, and we've applied the way we work or our classifications and regulations to the supply chain. And let's say that the second major vector is simplification. As Antón pointed out before, we wanted to have a company that is much more straightforward and much more simple, that the people could understand better, so that our stakeholders could understand it better too. And we've made a significant effort aimed at simplifying the company. And in order to do so, we've divested in certain activities, and we are practically at 100% of the level of divestments and those companies that we wanted to divest in. And we've reorganized the company around the different transformations that I mentioned to you in the presentation of last year, at last year's AGM. We're talking about energy transition, digital transition, and the industrial transition. And as regards our simplification process and our divestments, well, please note that during the year we've reached about 140 million in divestments, and well, that's another 10 million euros in EBITDA. So all of the figures that we deliver this year should or must take into account these numbers. If we want to make an organic comparison, that is, that we compare identical things. As you know, we are now divesting our renewable assets. We've been working on that in 2024 with our assets in the Dominican Republic. We're now reaching the final steps, and we've decided who is going to buy these assets. Let's say that we have reached the final stretch. we have a binding offer, and we are now developing the contract, the SPA contract. So we are also implementing or commissioning our assets in Mexico. We had this in Cerritos. It had been stopped because of political issues for 2 years, and now we have practically 80% of the assets under production and in motion, and we expect that it'll be fully commissioned by June. And as you know, it's an element that is for sale. And then we have our Italian assets. We found the right partner, and we are currently developing or carrying out our Italian activities too. As regards the major sustainability vector, we've taken a major step. And as I said before, we've reorganized the company in two major areas. We have one of the areas that we call Global Dominion Technologies or Global Dominion Energy, where we bring together all the classical activities of Dominion. And then here we have as a reference, we have the digital transformation and the energy transition too. And what we've done is set up a company called Global Dominion Environment, where we've brought together whatever has to do with the circular economy and decarbonization associated with the industrial transition or the sustainable industrial transition, that is. And in the report that we're going to be delivering, covering these different areas, well, here you have the areas. We have Global Dominion Tech Energy. We're going to see the classical services and projects where we have all of the recurrent activities and the specific projects in terms of health and energy, fundamentally renewables. And these are the two major areas. And we're going to look into the circular economy and environmental services that are closely related to infrastructures and more focused on what's being done in the different geographies, on the different countries. So this is a new report that you're going to be seeing as from now. And we think that this new organization will allow us to greatly simplify communications in the company and will be easier to understand what we do. And it will also allow us to compare this with other market peers. As I said before, as regards Global Dominion Tech Energy or Global Dominion Technologies, in the classical Dominion, we have a major service area where we're talking about maintenance services for energy grids and also for telecommunication networks with all the logistics and commercial things that are associated with these services in terms of maintaining energy and also the maintenance of telecommunications networks and in projects, whatever has to do with projects that are linked to technology in the world of healthcare or the world of hospitals and energy projects that are fundamentally about renewables and within renewables, things that are connected to the solar world. And as regards Global Dominion Environment or GDE, and this is where we're going to be focusing our investment efforts or our inorganic growth. We have two major areas, and one of them is focused on whatever has to do with the circular economy. And that is going back to the production processes involving waste, and we also want to reduce our levels of pollution, or we want to help our customers so that their companies can be greener or much more greener, or let's say much more decarbonized, as it were. And this company has been born with a clear-cut purpose, and is to lead the industrial transition and sustainable transition through innovative solutions by waste management and also by reducing emissions. And now talking about the remuneration or the return for shareholders, you know that we're talking about the payout of 15 million in the dividend, which is above our commitment of 33%. In other words, 1/3 of the net profits of the company. So in other words, it's 38% of the net profit, the comparable net profit, because we have maintained payback somewhat higher than the figures reported in 2023. And now that we're here, and as we've held a board meeting 1 hour ago, we've approved the results of the first quarter of 2025 in this new format that I'm talking about here. And I would like to present this to you very quickly. And the important account is the one you can see on the right-hand side. and where you can see organic growth totaling 7%. And we have closed the quarter with 264 million in turnover, with a growth, 9% growth in EBITDA and 11% in EBIT, and 49% in the case of net profits. And of course, this growth in net profits is due to the fact that last year it was highly penalized because of our financial expenses, and also because we had lots of taxes to pay. And I think that these are magnificent figures that, in a way, are, let's say, pointing out how we are complying the strategy established for this year, and we have a lower financial burden. You have the bridge, and on one end of that bridge, you can see organic growth, and the inorganic growth, that is the end result of the different divestments that I've pointed out before, 140 million in divestments that we've carried out in different activities, Serbia or Miniso, and some other minor operations, and we have a forex effect that is fundamental, the dollar and the Mexican peso with 1%. But if we look at this by segments, in this new division that I mentioned to you before, Global Dominion Environment, in environmental services, it's 43% of the sales and 32% of the contribution margin. And as regards Global Dominion Technology Projects, that's 13% of sales and 20% of the contribution margin. And then we have Global Dominion Technology and Services, whatever has to do with energy and telecommunication services, which is 44% of sales and 48% of the contribution margin. So you have all the figures there on the right-hand side of the slide. And as I was saying to you before, it means that unless something very strange happens beyond what we have forecast, we consider that we are going to comply with the plan. And it's a year or a year and a half to go yet. And this means that we will meet our strategic guidance. As you know, at a quantitative level, it's supposed to grow 5% in CGR, in organic growth, and 7% in EBITDA, and 9% in CAGR in terms of free cash flow. And that's all from me. That's all from me. Thank you very much for your attention. Thank you very much. Secretary, please. Okay, let's continue now with the formal issues of this AGM, and I would like to refer to issues that have to do with corporate governance. And the first point is that, as mentioned previously, when I listed the different items that are to be voted on during this AGM, we will vote on the annual remunerations report for the board members according to Article 541, the corporate law. And this report, as you know, it covers complete information, clear information, and completely understandable information on the remunerations policy that is applied to the previous fiscal year and to this fiscal year that applies to the members of the board. And it also includes a global summary of how this policy has been applied, or how it was applied in 2024, as well as the details of the individual remunerations of the members of the board of this company. And the second item is that I'd like to point out that there's been an intense activity of the committees in 2024. And we've had the Audit and Compliance Committee working very hard, as well as the Remunerations Committee and the Sustainability Committee, as stipulated by the legislation and the internal regulations. They've done lots of work in the fiscal year, and the Audit and Compliance and the Remunerations Committee draft a report every year that summarizes their activities throughout the fiscal year. And finally, I would like to underscore that in this fiscal year, the Board of Directors has continued with its commitment to safeguard the implementation of the best governance practices that are the absolute pillar for the sustainability element of the company. And the report approved by the Board of Directors on April the 25th says this very clearly. And as regards the annual report on the remunerations of the directors, as well as the activity reports of both the previously mentioned committees, were made available to the shareholders when we called this meeting, and we would like to invite you to read these documents if you wish to do so. Very well. Well, before moving on to the Q&A from the shareholders, I would like to ask the Secretary to give us the quorum of the people that are present here, the shareholders that are present at this meeting. Well, the final count is that we have personally here, we have 35 shareholders present in person that hold more than 65 million shares, and they represent over 8 million euros, and this represents 43.46% of the share capital. And then we have represented 53 shareholders that hold over 19.4 million shares, and which represent over 2.4 million euros and 12.89% of the share capital. So therefore, we have either present or represented, we have 88 shareholders here that hold more than 85 million shares, and which represent more than 10.6 million euros. So 6 billion, and which represent 56.3%. And the previous result, and as we've already mentioned at the beginning of the presentation, we have either present or represented. We have shareholders that represent more than 25% of the company's share capital. Okay, well now, if any of you shareholders wishes to ask for more information as laid down in Article 197 of the corporate law on these issues that are covered by the agenda, the time has come for you to speak up, because now we have the floor open for your interventions. We will now put to the votes in. We will be voting on the different items, each of the items that form part of the agenda of this call. And well, although this has no relevance for the resolution, but certain items of the agenda have to do with the vote sent in by the post. There have been abstentions and votes against it, but we'll give you all the details, all the exact details, and when we provide all the relevant information connected to the outcomes of this board, and we'll send information to the Stock Exchange Commission this afternoon. Right, so let's put to the vote the different items on the agenda. First, examination and approval, if appropriate, of the annual accounts and the management report of Global Dominion Access Authority, as well as the annual accounts and the management report of its consolidated group of companies corresponding to the fiscal year 2024. Is this approved? Are there any votes against or any abstentions? No votes against or abstentions. Approval of the management of the board of directors corresponding to the year 2024. Is this approved? Any votes against or any abstentions? Mr. Almeida says that he votes against. Point number 3, approval of the application of results corresponding to the year 2024. Is this approved? Are there any votes against or any abstentions? We take note of your abstentions. Point number 4, examination and approval of the non-financial information statement and sustainability information of Global Dominion Access and its consolidated companies. Is this approved? Any votes against? Any abstention? No. Point number 5, and revoking the authorization awarded by the AGM of April 23rd of 2024, and authorizing the board to acquire shares, stocks through the company itself or through the different groups in the company as per Articles 146 and 509, and authorizing the board to reduce the share capital by amortizing the treasury stocks acquired. Is this approved? Are there any votes against or any abstentions? No. And point number 6, extending or appointing the account auditors of the company and its consolidated group of societies or companies. Is this approved? It's approved. No votes against, no abstentions? No. Point number 7, setting the maximum remuneration of the boards for the current fiscal year. Is this approved? Are there any votes against or any abstentions? No. Point number 8, approval of the new remunerations policy of the members of the board for the years 26, 27, and 28. Is this approved? Any abstentions or votes against? No. Point number 9, we're going to vote now on the annual report on the remunerations of the members of the board for the fiscal year closing on December the 31st, 2024. Any votes against? No. Any abstentions? No. Point number 10, the delegation of powers for the execution of these agreements. Are there any votes against? Any abstentions? No. Very well. So therefore, we have approved all the agreements that are referred to on the agenda. And to close this meeting, we suggest that we also approve the minutes that have been drafted during this session. And I would also like to propose, unless you have other requirements, that we consider it has been read in full and it's ready for approval. Do we approve the minutes of the meeting? Consequently, we also approve the minutes of the meeting, and as there are no further issues to be dealt with, we adjourn the session here. Thank you very much.